Hello everyone. Hope you guys are doing great. In my today's video, I'm going to discuss about the, recent H2 FY26 results and the full year FY26 result for WOMANCART Limited. So we'll understand the business model in short. What do they actually do, and we'll just go through the numbers. And I'll personally give my opinion of what do I feel about these numbers, and what is will the company, can the company do in future. So let's just get into it. So Women Cart, I think with the name only you understand they're mainly into women's clothing, jewelry, makeup, and accessories, right? So generally, what do they have? They have various categories of products from skincare, hair care, personal care products, right? And they what they do, right? They have third-party products which they sell, but they have their own brands. And the main reason why any company has their own brand is because the margins definitely help over there, and they sell their products through online as well as through offline channels. Through online, they sell obviously through Amazon, Flipkart, Meesho, and all these things. And then they have their own offline stores called at Women Cart Store and Women Cart Look. So if you look at their various brands that they have Swider Jewel, Faiza, Feya, Wonder Cablex. They have quite a list of their own brand. So this is their whole business model, and that's how they make money. Let's look into their recent result, right? So if we look from the revenue perspective from H2 FY26, it's quite great because the revenue grew by almost 125% to 83.8 crores, and their EBITDA margin also improved to almost 29.7 crores, but the PAT was almost down by 38% compared to the last year, to around 2.8 crores. So, which was not a good sign for the company, right? At the same time, if you look for the overall FY26 result, the sales grew by almost 126% to 133 crores, and the EBITDA margin also improved to almost grew by almost 80 percent to around 17.8 crores. But in terms of PAT, it grew only by 12.9% to 8.1 crores. So overall, if you look at the years, yes, they were profitable and the profit slightly increased, but they did not get the operating leverage. So let's look into the why the profit, especially for H2, declined, and why the overall they never got the operating leverage. So let's look into the reason what the management has given and what we have understood, right? So first is obviously they for the H2 they had given some strategic discount initiative. What they said that they want to acquire customers. Obviously, if you give more discount by default, the overall margin also reduces. And the other thing that they said that the the rising of the raw material prices also had an overall impact because they could not pass the complete cost to the customers, and that is very important, right? Because here uh, they are very price sensitive, right? And there are a lot of discount wars going on. So if you increase the price too much, it could have an impact. And the other reason which the overall margin got impacted is, right, so normally they have their own store as well as their own website called WomanCart, right? And if they're able to sell more products from there, they'll definitely be able to get a better margin because they do not have to pay anyone any other commission to list their products and everything. But this especially from the second part of the year, the majority of the contribution came from the marketplaces like Amazon, Flipkart, and Meesho. And automatically, even though the sales might be high, the margins are quite low because you have to pay the advertisement cost, the listing cost, and the discounts that they have to give, right? And to list their product even more higher, all those things matter. So that's where also the the overall margin got and I couldn't understand why the company could not concentrate more in advertising on their own website and everything and trying to get more customers via there, because in that way the margins could have improved. I mean, we have to see going forward. The other thing is, right, which I would say it's not a bad sign, because if you look at it, the depreciation, if we look from half year perspective, it rose by almost 300% to 3 crores for H2, and for the overall year it increased by almost 321% to around 5.6 crores. So yeah, in terms of accounting profit, it brings the profit down, but in terms of cash flow, it doesn't really matter because yeah, it adds on to the cash flow. So it's if you look at it, it's a good sign because the company is expanding their product, their stores, and everything. So obviously, at the back of it, the depreciation will also rise. And the other, the double impact what happened on the overall, for earning per share also is like, first of all, the margins were impacted due to which the profit, for the whole year they did not get the operating leverage. At this same time, for the H2 year, the profit declined. To expand their business, they did equity dilution. So over here, the shareholders, got affected twice at this point of time. First of all, the margins were overall impacted. At the same time, the equity dilution. So obviously, even if the profit grew, but when the equity get diluted, the earning per share automatically reduces. The only things which were good in the overall update, I would say, is like they had a good customer retention of almost 30%, and their same store sales growth grew by almost 20%. And if you look at their overall store, it is right now at 9, which looks like they're concentrating more on the online part. But if we look at the number of addition, they added only 2 stores. They are currently based out of Delhi NCR region. So the only way they can grow further, I would say, is to expand the number of stores also that they have, because Delhi and NCR is such a huge area, and I think you can easily have close to 40 to 50 stores. I mean, that's my personal opinion. Let's see how does the company does. So overall, if you look purely from the revenue perspective, the company did well. But if you look from the margin and profitability, it's not a good sign. And at the back office, the market also reacted the same way, because as soon as the result came out, this the stock went and hit you know short circuit by almost close to 20%. And the next day also, it went down by another close to 15%. So which clearly shows that the market does not like. And the other problem is, because it's a very small company and with very few shares, and the liquidity is not this less, the selling of shares even puts more pressure on the price, and the price goes down more drastically. So this is one thing, when anyone is investing in such small company, needs to be aware, right? These are very volatile, especially if the results don't go with their expecting. But at the same time, I know things are not looking that well, but if they are able to do the right things, grow their revenue but not let their margins be impacted, they can do much much better in the coming year. Let's see how do they do in the H1 of FY27 and going forward. If they are not able to improve their margin, I mean, it's not going to be a really good sign, and the market will also, give the same answer by beating down the stock price going forward. So I'll keep you posted when the H1 result will also come out. And if you like this video, please do subscribe to my channel. Thank you and God bless you.